Thanks, Jeff. And now it's time to bring in our next guest, Michael Burleigh. He's the president of Peak Capital Management, a retirement income store located in Jensen Beach, Florida. Mike, thanks so much for being back with us here on the show.
Hey, Dave. Thanks for having me back.
Mike, it's great to see you. We've had quite the run in the stock market since the COVID crisis in March of last year. Income planning and investing in fixed income has never been more important at these all-time stock market peaks. Give us your take.
Well, yeah, these things don't run forever. At some point, we're going to have a correction. I think the biggest risk to retail clients or retail investors is they really don't understand market volatility and what can happen. Not if we get the next downdraft, it's when we get the next downdraft. At that point, you're going to need to have some interest in dividends coming in to supplement your retirement.
So you think it's going to be a lot more challenging for the market to continue this massive expansion with all the headwinds we might have going forward the next 12 months, Mike?
Well, look, we've had a great run this year. Can we have this kind of run for the rest of the year? Hard to say. Personally, I don't know. I don't think so. I'm cautiously optimistic. We've got some, different variants of the Delta coronavirus. We've got the debt, borrowings out of control. I mean, these things could play into it. They could be factors. So, hard to say. I mean, there was an article in the Wall Street Journal yesterday, and they kind of likened it to flat screen televisions. The more inexpensive the government debt becomes, the bigger it gets. So to me, that could be an issue down the road.
That's an interesting analogy, but we also have inflation. And recently, Mike, we had this huge demand for things like lumber, and lumber prices have just crashed because everybody said, we're not paying those prices anymore. And so I kind of see a tulip mania in stocks as well because they've been run up so high, the valuations are so high. So income planning really is the central barometer for folks to avoid the next stock market drop and get earnings. Or is that what you're doing for your customers?
We invest for the known first. And what I mean by that is we invest for the interest in dividends first. Growth becomes secondary in retirement, not primary. That's the distinction, Jeff.
Yeah, you could do that even in the stock market, of course, as I know you do, where investing in interest in dividends doesn't mean being out of the stock market. You can still be in the growth game and get some interest in dividends. But I guess the question is, how many of your clients do you think learned something about themselves and their own risk tolerance levels when the market took this major drop in March of 2020?
Well, I think it was a wake-up call for a lot of them. When they saw that market drop over 30% in a very short period of time, I think they came to the realization that, markets don't always just go up, up, up.
Yeah.
And if they need income, they better have be invested for some income, have some interest in dividends coming in, supplement their retirement plans.
That's right. Hopefully they did. My fear was that Congress jumped in too quick, the Fed jumped in too quick, and people have gotten used to this. Oh, bear markets recover after only 2-3 months. So you've been around long enough to know that's not always the case. So what are your final words of wisdom for those people who are watching and listening that are either retired or within 10 years of retirement?
I think if you're within 10 years of retirement, the name of the game is to start transitioning from the accumulation phase of your money to more of a preservation and distribution phase of your money. Like I mentioned earlier, you cannot eat growth. You have to have income to supplement your retirement. For a lot of folks, that could be, Social Security money only be 50% of the retirement, 40% of the retirement. They're going to need to supplement that with interest and dividends rather than liquidate principal.
Yeah, and what's neat about that is, Mike, as you know, that's not something that we learned, a lesson from the coronavirus crisis. That's always been good wisdom. So it's about getting back to basics. So as usual, Mike, thanks so much for your wisdom, and thanks so much for being such a friend of the income generation.
Hey, thanks, Dave. Good talking to you guys.